Well, today's the day that Facebook comes out with their IPO. The companies from the IPO price will be worth $100 billion, while they made $1 billion in earnings last year. That gives it 100 PE. No matter how you count it, that's a very expensive IPO. It probably will go well, but 5 months, 6 months down the road, earnings is going to be what counts, and it's a matter of how can they maintain growth of earnings in the face that General Motors pulled their ad from their Facebook account. So, ad revenue went down last quarter for Facebook 6%. So, I don't know. It seems awfully expensive to me. Hopefully, it'll be good. The week had a bunch of economic numbers, and those numbers were pretty decent. There was a couple of disappointments in there. Inflation was low. The Empire State economic activity rose to 17 in May. It was expected to be 9.5, but at the same time yesterday, Thursday, the Philadelphia Fed showed a shrinkage in their area, minus 5.8. They expected it to be 10, and it was 8.5, so it shrank. So that was surprising. But otherwise, real estate sales, new construction sales, those numbers were very, very good. I don't want to say very, very good. I want to say much better than expected. So the builders' sentiment was higher at 29. Of course, 50 and above is normal for a healthy real estate market, so you can see how depressed that is. Industrial production was up sharply in April. Remember in March it was down. In April it was up, and up broadly. So, and unemployment claims this week came in, it's the same as last week, which is not a bad number, about 370,000. That's not a bad number. I'd like to see it down at 350 or less, but that's not a bad number for producing jobs. The market focused on Europe, and in particular Greece, this week. So it was weak. The market was weak. Second week in a row it's been weak. We're down about 7-8%. That is definitely a correction we are in. It would not surprise me to go to 10, but I have a feeling we're due for a bounce. It's probably oversold, so we're probably going to see a bounce. It might be starting today, it could be next week, but being oversold, when the market's down, and so many days in a row, it gets stretched. And it's the same thing was true on the upside. It gets stretched. At some point, it will bounce. That doesn't mean it won't continue going down or continue going up, but it will bounce up and then continue down, or bounce up and start recovering. It's hard to know which. My personal opinion is it's going to bounce and then be choppy. It's still not going to, we're not going to be in a bull market phase for most of the summer. I just don't see it. It might be a choppy phase. I don't think it's going to be disastrous. And it's going to be a stock picker's market. I think by the end of the year, or once Greece gets out of the euro, gets either kicked out or they leave, or the EU gets together and decides they're going to save Greece, then I think the market will take off. But we're not in that phase yet. We're not there yet. So that's what's happening this week. No inflation. That's not been a worry. So it frees the Fed up to do whatever it wants. I can see a QE3 coming this summer. I can. And that's going to be very good for the market.
The InvestTalk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's InvestTalk talking points, plus news of upcoming InvestTalk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.